Welcome to the WanderLearn podcast. I'm your host, Tapon. When I travel, I love to observe how there's a common ground in a sea of diversity. For example, there's about 100 currencies on the planet, and yet there's one thing that everybody agrees is money: gold. Now let's talk about the current topic of the day, which is COVID-19, which has killed over 200,000 people. It's also killed the global economy. The travel industry has shut down. The stock market's in tatters. Now, what has this got to do with gold I just mentioned? Well, the price of gold and, by the way, Bitcoin have both soared. Few people are talking about recession. Everybody's talking about depression. So we get into the nuts and bolts about gold across the world. I talk with a renowned gold researcher, Jan Nieuwenhuis, and we talk about the stock-to-flow ratio, which has been a very popular way to determine Bitcoin's price recently and predicting it. And we talk about asteroid mining. We talk about how to store gold safely and effectively. Enjoy this podcast. Welcome to the WanderLearn podcast. I'm your host, Tapon. I'm here with Jan Nieuwenhuis from the Netherlands. So we're still in the middle of the COVID crisis, so we're socially isolated by a continent.
Otherwise, I would have flown to take a plane to California and do it there. Of course, yeah. Thank you for having me.
Since you're an expert on gold, and we're in the middle of a crisis, a pandemic that oftentimes has a huge impact on gold. People run to gold. I want to talk about that, and also want to talk, since you have some experience in Bitcoin, compare the two, and specifically want to talk about a popular Bitcoin model, which is called the stock-to-flow model. So we'll get into all these things. Let's talk about, why do people flock to gold when a crisis happens? It just seems like, from an alien perspective, if a Martian came here, like, there's these little primates running around, and when all of a sudden things get scary, they run and clutch this shiny metal. Makes them feel better. It just looks like, this is crazy. What is the odd behavior we have?
Well, first of all, maybe it's nice to, it pops to mind, is that when gold was first discovered by humanity, it was completely useless to us. It was first that they found copper in riverbeds or wherever on the ground, and it was usable for tools and weapons. So there was the Bronze Age, right? They mixed a little bit of copper with tin, and they had bronze, and it was really hard, so they could make a lot of tools and weapons out of it. And gold was too soft, so they couldn't really use it. But then, at a certain point in time, this is what archaeologists think, they started to see it for its beauty, and they started to see the sun in it, and the sun gave eternal life. And because it was so soft, they made jewelry out of it. And so the first thing humans used gold for was for its beauty, for aesthetics. But because it was so rare and scarce, it immediately had a very high, let's say, value. You know, you needed to pay a lot of grain or copper for a little bit of gold because it was so scarce. And to tie it into the topic you want to talk about, the stock-to-flow ratio of gold, the thing that happens is, when something is eternal and can't be destroyed and doesn't rust or anything, the above ground stock of gold is only increased every year by a very tiny amount. So the total supply, the total stock, is quite constant, and that gave gold a quite constant purchasing power. We can talk, there's a difference between price and purchasing power. For example, if what they are doing right now is the Federal Reserve would print a lot of dollars, the price of gold, of course, would go up, but the price of everything would go up. So the key is the purchasing power of gold. Now, we have data from a lot of archaeological evidence, but also old historical books, mainly from the UK. They were very keen on keeping all the data. And gold has a remarkable constant purchasing power.
I was reading some articles just to do a little bit of research in this, and some people were actually arguing, some gold bugs, the people who really are big fans of gold, were actually arguing something that I thought was kind of counterintuitive. They're saying that, no, gold is not scarce. It's actually abundant. There's a lot of it out there, and that kind of stuff. And, just like we don't keep track of it, and and there's actually a lot of it. And because I guess I don't know what the argument is, but Can you explain, maybe, is there friction among people who are gold aficionados, those who are saying no, it's scarce, and other people saying no, it's abundant?
Yeah, of course, this can be clearly explained. It has to do, it's a little bit philosophic, and economics is about philosophy, in my view, because gold and every type of money is just a social agreement. It only has value because we all believe it has value, and because we have agreed it has value. I mean, if I do a job for you, you pay me $50, and I accept it because I believe that tomorrow I can spend it. So it's all just fictional, right? Every
Right.
money is backed by trust. That's it.
A gold bug would say, well, no, but gold is actually real. It's actually physical. It's not a fiction. And I think to myself, again, going back to my analogy of aliens coming on the Earth and seeing Homo sapiens and primates running after this shiny metal. I mean, there's some logic to it because, as you know, the supply is rather not fixed, but it's the stock to flow that we talked about. You know, it's so I mean, it's not like we're running after just a random rock or concrete. We're going after something. There's some sense to it.
The end goal of every participant in the economy are goods and services. And goods and services have use value to us. So you have a sandwich, you have a bike, you have a sweater, you have a house, you have everything. Those things have use value to us because that's always the end goal of a participant in the economy. Everything else, stocks, bonds, whatever, has no direct use value for us. It's just a means to an end.
Correct.
So,
but gold is like a hybrid.
No, not really, because it's mainly used for monetary applications, being coins, bars, but the jewelry is also a store of value combined with aesthetics.
Fair
right?
enough. That's why I was thinking of hybrid. That's why I was thinking of gold being a hybrid in some ways.
Yeah. But the jewelry market is more or less I'm happy I started the story with, we first discovered gold because of its beauty, and it's kind of funny. But no, jewelry is also a store of value, although some people not really consciously think about it like that. But if you would ask a woman in India, she knows, she handles the money of the family, and 50% is in gold if they have a bank account.
Right. And by the way, that actually is something that brings me up. I just learned also something recently that I was like, well, what if you store gold in your house and your house burns down? And then I read that actually, well, gold can resist the temperature of a typical house fire, and it will not melt.
I forgot about that. I don't know what the melting point is of gold, and I don't know what a typical fire melting of.
Fire for home, I think, is 1,500 degrees. I think Fahrenheit, not Celsius. I think it's Fahrenheit. And anyway, the melting point of gold is about twice the temperature of a house fire. So
I thought a lot of people have like a fireproof safe in their house for gold.
It probably is an extra precaution.
Yeah, but better safe than sorry.
But again, I could be wrong. I'm not a gold expert. But
there's two things we're talking about now. One is a disagreement between analysts, and we're going to talk about this, between how much gold there is above ground. Right. And on the other hand, there is an economic discussion about, and this is my view as well, we don't use gold for anything but money, right? So, and some economists, let's say they're mainstream economists or Keynesian economists say, well, there's not enough gold in the world to serve as money, which is of course not true, because if you raise the price of gold, then you just need let's say a 1 troy ounce of gold has a lot more value and a lot more purchasing power. And the more you raise the price of gold, the less of it you need. So of course, there's always plenty of gold enough to be used as money if the price is right. That's what, some people say about, well, there's no scarcity of gold because we have enough for it to be used as money.
Right now, some people say the stock to flow is roughly around 65. In other words, we have a 65-year supply of gold in stock, which is super high. But some people say, no, it's actually like 3,000. Or the stock to flow ratio is like, in the thousands, not 65, just
Yeah.
because their stock to flow ratio is different. But it seems like most people agree that it's in the 60s or 50s or 70s, somewhere in that zone. Any opinion on this?
Yeah, yeah, it's 60. It's
Okay.
about 60, and it has been roughly 60, let's say 65 for the last 100 years. I just took a look at it. I can also look further back, but of course, the more back you go, the less accurate the data is. But if you look, this can be clearly explained as well. Of the last 100 years, say from 1900 or even 100 years before, but we have very accurate mining data. I mean, the world was already globalized. There was gold being mined in Russia, in South Africa, in the USA, in Canada, all over the place. And we kind of know what was added annually to the global stock. Now, we also know that hundreds and thousands of years ago, that amount that was being mined, the amount of gold, was much lower. To give you an example, and this is where the opinions differ, because some people say the stock to flow is much higher because in ancient times there was a lot of low-hanging fruit. The nuggets, huge nuggets, were just laying around the riverbeds, and gold was abundant, whatever. This is not true. So I'm quite sure that currently annual mine supply is 3,300 metric tons, and the above ground stock is 195,000 tons, which gives you roughly a stock to flow ratio of 60.
Got it. Now, do traders of gold and gold analysts, do they actually look at stock to flow in order to gauge the price that gold is going to or should be at as a metric?
No. The fun is that they look at, and this is something that is that I know you want to talk about Bitcoin and this gentleman called Plan B, which is also a Dutch resident by coincidence. They think that the stock to flow creates the price, but that's not true. The price of everything is set by supply and demand. So supply, yeah, you can, it's all this stock to flow talk is about supply. But if there's no demand for something, the value is zero. I mean, if you create, let's say, if you would build a building and you would, put like $1 billion in it to marble, whatever, bathrooms, but there is no buyer, the value is zero.
Right.
This is basic economics. It's called the subjective theory of value.
So
people buy gold.
What is stock to flow good for in the gold market? Why do they measure it? Why do they care? Does anybody care?
We do care, because the funny thing is that because people have demand for gold, and there is so much above ground and there is so much that's coming out of the ground every year, if demand rises compared to supply, if demand outpaces supply and the price goes up, it becomes more profitable to get more gold out of the ground. And in this way, this is like a self-regulating system, you can say. In this way, the stock to flow ratio is kept more or less at a constant. But not because people look at the stock to flow ratio, it's because people have demand for gold and they look at the price and its purchasing power, and they look at all sorts of other assets like stocks and bonds and what central banks are doing, etc. Also of importance now is, for example, the oil price is now very low. So with a very low oil price, it becomes much more profitable to mine for gold. So everything in the economy plays into this. It's not just, as with Bitcoin, what some people think, oh, you have a mathematical model and that's it.
Right. So what are the drivers of the gold price, or how can you try to predict where the price is going to? Like, for example, if you're thinking about the 2020s, long term for this decade, how do you go about trying to figure out where's the price of gold going to? What metrics do you look for? What methodology you use?
I'd like to look at a couple of things. For example, the amount. If you look at the value of gold now and you compare that to the value of all other financial assets, then gold only makes up about 0.6% of the entire financial asset space. Now in the 60s, that was 5%. So it's quite low. So it can, I would say it's still undervalued. Of course, gold doesn't yield. So if the economy is going well, a lot of investors don't want to hold gold. They want to have something that pays a yield, like sovereign bonds or stocks or whatever, derivatives. For example, there's a correlation between the gold price and the real interest rates of in the United States. So the benchmark is the 10-year sovereign bond in the US. And that, for example, has an interest rate of 2%. Then you subtract the inflation, and what's left is the real interest rate, right? And the movement of the real interest rate is very tightly correlated with the price of gold.
So what year did you first buy Bitcoin?
I bought my first Bitcoin in 2011, actually, at $25. I bought 5 Bitcoins, and I lost them because at one point my computer was a bit working not so well. So this technician came in and he said, I see you have some Bitcoins in a Bitcoin wallet. Yeah, no, those, there can be a virus in them. So he threw them away. And then, yeah, it's funny. 5 Bitcoins. And
Are you sure he threw them away? He didn't send them to himself?
I'm still thinking about it. No, they're gone. So maybe
if that computer guy is now living in a mansion somewhere.
Oh, these crazy stories.
It's interesting because my brother bought Bitcoin when he bought 10 Bitcoin when it was $1. And he held it, I think, at Mt. Gox or one of those early exchanges, and the exchange got hacked, and he lost his 10 Bitcoin. So
yeah, you have the most. I don't know if I'm allowed to swear, but the most.
Yes, you can, please.
Fucked up stories about people losing Bitcoin, and oh my God, it's a lot of fun.
By the way, are there fucked up stories about people losing gold?
No, because it's very hard to lose gold, and gold is something that I didn't touch in the first question, is that gold has it's the most independent financial asset there is, because it's not man-made. It's and very liquid, and it's completely neutral. It's not printed by one government, and it doesn't have any counterparty risk. Right? You don't need power, you don't need miners, you don't need the internet, you don't need anything for gold.
But hold on. What about in the case of, let's say, I want to buy physical gold? And there are cases where maybe there are some people who, and I want to have the custody of the gold somewhere else, let's say in Alabama or somewhere else the actual gold is being stored at. And it seems like there's got to be a lot of openings for scam artists who say, don't worry, I've got your, 1 kilo of gold sitting in my warehouse out here. Trust me. And like, well, I want to go inspect it. And so then they just set up the warehouse to inspect it. There's your gold right here. Check it out. And then, okay, great. And then the next customer comes in. Where's my 1 kilo gold? They bring you to the exact same thing. This is your gold right here.
Yeah.
And so every customer who comes in, they point to the same 1 kilo gold saying, that's your gold. In other words, like, I mean, maybe I'm being too cynical about this, but it just seems like in these custody operations, if you're not going with a trusted place that has a long reputation, and it seems like there's a lot of opening for scam in that situation. Am I wrong?
No, you're completely right. You should be very careful about choosing a vault operator or a broker or whatever. And it's also Jim Rickards is a famous gold commentator. He calls it the bicycle rule. So it's also good to have, even with gold. For example, if you have $1 million, you diversify your assets. You have a little bit of gold, a little bit of stocks, a little bit of bonds. But even your gold should be diversified. So maybe you have a few coins at home. If you have more, you can put something in a vault very nearby that you can reach on a bicycle. And if you have for millions and millions of gold, maybe you need a very safe space like Swiss vaults or in another very safe country. So these are all things to think about. How can you access it? Is it safe there? What kind of scenarios am I preparing for? All these type of things. But yeah, it's very important to think about scam artists as well. There have, of course, been examples of dealers that didn't, they had less gold in their vault than they promised to their customers. And These people get busted, but I would say, yeah, I'm in this business now for like almost 10 years. Yeah, I know what businesses are very long in this, and you can look, by the way, because a lot of them have third-party auditors. For example, the company I work for, Voima Gold in Finland, we also have a third-party auditor that comes in, counts all the gold, checks our books, etc. Everybody can always withdraw their gold. So every gold company has its own auditing structure, and but it's up to the customer to check out if that's all where you feel comfortable with.
Tell us a little bit about your company and what you do for it.
So I'm a gold researcher, gold analyst. I'm also now more into writing about economics, because how I started out was I started a blog in 2013, I believe it was, and it was only about the Chinese gold market. And since then, I developed a lot. And it's very nice to write about gold, and there's a lot to be said about it. But in the end, it's all about economics, reasons to buy gold. So I'm trying to expand all the topics I'm writing about. And basically, that's, of course, beneficial for the company because a lot of people get good information from us, and it drives traffic. And our company, it's called Voima Gold. It's in Helsinki. It's basically like a gold dealer I just described. You can open an account with us. We call it the Voima account. And at the moment, we have a lot more developments coming. At the moment, it exists of a currency account, so let's say euros, and the gold account. And you can choose how much you want to keep in euros or in gold. And it's very efficient and easy, because at us you can pay and buy and sell per gram. So in other instances, for example, if you want to have coins in your home, of course coins are a bit, you're stuck to the denomination. It's 1 troy ounce. You can't break a coin if you want to sell a little bit. So of course the digital revolution, of course, has also unlocked gold, so to say. So you can buy and sell per gram.
How much is 1 gram currently, roughly?
It's 50 euros per gram, so that's a little bit more in dollars. So it's like $55 per gram.
Right.
Yeah.
Okay.
And
so you can have in your company, you can have a bank account that is a regulated, insured bank account with euros, and then when you feel like the market is about to go well for gold, you can transfer that cash into gold, and then when you find that the market is getting a little bit top heavy and getting a little bit pricey, you can sell that gold and move it back into cash. Is that more or less what you're saying?
You can use it like that, but that is more like trading. And
right.
We like to think of it as, I think if you look at your bank account now, you have like a current account, it's called, right? And you have a savings account. And the money, interest rates are very low now, but let's say 10 years ago, you have some money for where the income comes in and where you spend money from. And if you have a little bit money over, then you move it through your savings account. Now, in our model, it's not completely built. We have the app, the iPhone app and Android app already, but in a few weeks, the whole system will be, the rest of the system will be ready. And what it will be like is that basically you have a savings account, but that is physical gold in grams. So you can do all your banking services. We're not a bank in terms of, we don't lend anything to anyone. You can't get a loan, but all your payment services can be done in our app, so to say. And so you have a euro account, which you can receive money in, and you can spend from. But you also have your physical gold account as a savings account. But you can also spend your gold. There's going to be a debit card, and it's going to be linked to, the Voima account. And you can just press a button on your phone if you, for example, see an expensive bike and you want to buy it from your gold. You can just say, okay, I want to now, pay with gold, and then you buy the bike. And of course, because the shopper, the merchant, wants to receive euros in this part of the world, and then the gold is real-time exchange for euros and paid to the merchant.
What made you buy it, and what made you then, you eventually, I think you told me you sold in 2017 when the prices, I think, were pretty crazy high. What was going through your head as far as like why did you see any value in this digital
Yeah, so I just
currency?
thought I bought Bitcoins and then I lost it a year later.
Mhm.
I bought it because I was really interested in economics after the great financial crisis of 2008. And I was interested in gold, and then this new currency came up, and it started to go up in value. First, it was 1 cent, and then it was $2, and I was like, oh damn, I missed it all. Uh, and but it was very interesting. I thought, you know what? I was also investing a little bit in gold and silver. You know what? I'm going to buy a few of these bitcoins as well. Because maybe this will be the future. I mean, what I like about Bitcoin, of course, is it's like a bottom-up invention. It's not a top-down thing from the government, right? So it's everything that is created from the bottom up is very or functions very well. And
Gold itself is a bottom-up invention.
of course, yeah,
Right.
yeah, we start to use it as money because the market was in demand for it. But anyway, yeah, then in 2013, so I lost those bitcoins in 2013. I saw the price go up again, and it was at $40 or $45. And I thought, those 5 bitcoins I lost, I'm going to buy them again now because I want to get back into my position.
Mhm.
And so I did. And then, in 2017, I thought this is, there's this famous story. I don't know if you know the story
The
about.
tulip mania.
No, not the Tulip Mania, but about a stockbroker. And he worked on the stock market in New York, and he went out of the stock market at the end of the day, and he had his shoes polished at a shoe shine man. And the shoe shine man said to him, "Oh, you have to buy these and these stocks because they're very high now, and they're going to go up a lot more." And the next day, he sold all those stocks. This is just a basic rule of investing. If the cab driver or your aunt at a party is going to tell you about some kind of asset that you have to buy, you have to sell it. It's the
Right.
peak.
Right. Exactly.
So in 2017,
Especially if it's an esoteric asset. You can imagine people talking about you need to buy derivatives. Really?
yeah,
Like,
yeah, yeah.
okay. When the guy
No,
who's
but
packing my groceries is talking about derivatives,
yeah,
I'm like, okay.
okay, this is weird. Yeah, I don't think he's a professor. Um, no, but in Amsterdam and probably all over the world in 2017, I could not walk into a bar in Amsterdam and people would start telling me about Bitcoin and whatever. And I was like, I'm going to sell. I'm going to sell all of it. So I sold all of it. And that
Got
was
it.
the end for me. And I still think it's a very interesting project. I'm not against the Bitcoin, but yeah, I just happen to not own any of it.
What do you think about the stock to flow model that Plan B, who is a fellow citizen of the Netherlands, they're Dutch as well? What do you think of it? Do you think it's bullshit? Do you think there's anything of value there?
Well, I think what he showed is really nice that the price or the market cap is more or less correlated to the stock to flow curve, right? So he says that the stock to flow model provides value, and that's of course not true. Maybe you and I know what the stock to flow model is of Bitcoin. It's like every 2 years the new supply is being halved, right?
Every 4 years, sorry.
Every 4 years, sorry.
Hmm.
I don't know it exactly.
Yeah.
So now there are 17 million or 18 million Bitcoins, and
Mm. Yes. And so what
every
happens is
year,
that every 4 years, the amount of reward that the miners get is halved. And so in May 11th, I think it is, of 2020, they're going to go from 12 and a half Bitcoin reward to 6.25 Bitcoin
yeah,
reward.
yeah,
And that really raises the stock to flow ratio dramatically
hmm
and almost overnight effectively. And because the stock to flow ratio goes up and will at some point pass gold, the stock to flow ratio of 60 something, that Bitcoin will become incredibly valuable as a result.
yeah. So that is what he writes in his article, in his basic article. He wrote a few others. So what he does is he says the value of Bitcoin is derived from the stock to flow calculation, actually. But I told you in the beginning of this conversation about the subjective theory of value, and that is that the value of everything is set by supply and demand. So the whole stock to flow model is only about supply. But what about demand? So if I would tell you that tomorrow I would launch a new cryptocurrency, and the halving would not happen every 4 years, but every day, right? So we would start off with, so to say, a million of my cryptocurrency, and the stock to flow ratio would not go up very rapidly in a few years, not in 10 years, not in 20 years, but in 2 weeks. Would it, be worth trillions of dollars?
Right.
I don't think so. This is not how economics works.
Right.
There has to be demand for something.
All right.
So the fact that the correlation is very remarkable, but there also have been other correlations between the price of Bitcoin or its market cap and, for example, the usage of the chain, how many transactions on the chain. For example, there's a guy called Charlie Morris, and his company is called ByteTree, and he has a different theory about the pricing of Bitcoin. And he looks at the intensity of how the blockchain is used, and that also has a correlation to the price. It's such an amazing invention that I hope it will go up, because I think there is I think also there's demand for it. But the price is from the demand and not only the stock to flow ratio. The demand is from how we can use it as money or something else. That will determine its value. I see similarities between Bitcoin and gold, and I hope they can go up together. I mean, anything but this paper money from the government, which is kind of destroying the economy now.
I was looking at a chart that you sent me, and in the video we'll show the chart, but basically you showed the stock to flow ratio over the last 120 years.
Yeah.
And it's kind of been has this wavy pattern. Now, if we overlay the price of gold on top of that, you see very little correlation between the two. And that's something that I think Plan B in his thesis kind of leaves out. I mean, it would have been much more powerful if he says, look at the price, the stock to flow of gold goes this way, and the price of gold follows it in tandem, but it actually doesn't. Correct?
No, but it has a lot to do with that the price of gold itself is meaningless over 100 years, because the price we are accustomed to dollars, but a dollar 100 years ago could buy you a lot more than today. So the price in dollars doesn't tell you anything. You have to convert it with inflation numbers to the purchasing power of gold, right? So it becomes a little bit more complicated. Now, if you look at Bitcoin exists from 2009. So that's only 10 years. So not a lot of inflation, in consumer prices has happened. There has been a lot of asset inflation, but not like with bread and bicycles. So it's quite easy for Bitcoin to just take the price, the dollar price, and make mathematical calculations and look at correlations. Whereas with gold, which has let's say 6,000 year history, you really have to look at the purchasing power. I mean, an ounce of gold in, let's say, 1900 was $20. But just the price in dollars doesn't mean a thing.
Right. No, I understood, because I remember seeing somewhere in my research that they showed you, I'm just exaggerating here, but 1 kilogram of gold could buy you a car, a really nice car, in 1960. And it can still buy you a nice car, or even a nicer car now, or something like that. It's the same, something like that. I can't remember the exact thing. But
this is about the purchasing power of gold, and it has actually increased in the United States. I can send you a chart if you want. Since 1971, the purchasing power of gold has increased, and this is what I talked about in the beginning, because there's been so much monetary acceleration in terms of debt increase, credit expansion, financialization. That a lot of wealth has been created, and gold has kept track of that as the Polaris in the monetary system.
a lot of times if you talk to Bitcoin people, there's like, it's only Bitcoin. Bitcoin is it. And, gold bugs are like, gold, no. And they almost look at Bitcoin almost like a threat to them, because it's just like they see this Bitcoin is trying to steal a bit of the gold thunder. And so they're trying to say, no, gold is real. It's a real thing. I can touch it. I can feel it. And, your Bitcoin is just a fantasy. But you actually have I think you can see both worlds. You're fairly objective about this thing, even though your career is in gold. So how do you compare the two assets, or the two things, gold versus Bitcoin? What do you see pros and cons, and how do you kind of analyze the two markets?
Let's start with gold. So I told you already that gold has no counterparty risk. Of course, if you put it in a vault by a vault operator, you have to trust the vault operator. But that's more or less, humans are social beings, so we don't exist in ourselves. We have also always cooperated in the economy, and so I don't really see that as a counterparty risk, although there can be a risk, of course, if you put your gold in a vault. But gold has no counterparty risk. It can't be printed. It's completely independent of the financial world, but also of humans, because it's just a physical element. Nobody can change it. They try to create it now in this, how do you call, CERN, the lab in Switzerland, where they do tests with physics. Anyway, if you throw a few $1 trillion at it, you can produce one radioactive atom of gold. It's not really worth it. Anyway, so I'll keep it short. Now, gold has a very long track record, and will probably also, if you look at, for example, central banks have a lot of physical gold in their vaults, not Bitcoin, not silver, not anything else. Gold is the backstop of the financial monetary system. It hasn't changed since 1971 in terms of, the asset of last resort, the ultimate store of value. We've done some experiments, and much of it is about psychology, but it's still there, at Fort Knox and other places. So if you go into a storm, and we are about to go into a storm, a very severe depression, what do you choose as for tools to survive the storm? You choose the tools of which you are certain that work, because they have worked for thousands of years. So gold will do that. But you can also bring some new tools, like Bitcoin, which is different. It's digital, so you can store it yourself. You don't need a vault for it, but you can lose your password, and that will be a bitch. Sorry for my French. But you can transfer unlimited amounts of value to the other side of the world without a bank or a government in between. You can just remember a few passwords in your head. You can step on a plane, come out in Australia, download some stuff, and have your value again. I mean, it's incredible, right? So I think they both have their pros and cons. But to put just numbers on it, I would put more value, or I have more. I already told you I don't have Bitcoin, but if I could have done it all over again, I would put more value in gold, because for sure that it will preserve its purchasing power, and I put a little bit less in Bitcoin, because it's more speculative, and you just don't know what's going to happen to it. And maybe the value would go to zero, because Ethereum or IOTA comes up and has more, I don't know, use value, and you don't know. So that is basically the pros and cons, how I see Bitcoin and gold.
Would you say 80-20 would be a good ratio? 80% gold, 20% Bitcoin, something like that?
Yeah, if you would ask me, I would say yes. Yes, I don't feel comfortable being a financial advisor, because I'm a researcher, but that would make sense. Yeah.
Okay.
Just the amount of money you put in Bitcoin, make sure you can lose it. Right? It wouldn't be the end of the world if you lose it.
Right. Where do you think the price of gold and Bitcoin is going to go in the 2020s? Because you kind of alluded to the fact that we're kind of on the threshold of a depression, and this should bode well for at least gold, for sure. I mean, historically, gold has a long track record of doing well in depressions. Bitcoin, we haven't really, it was created during the financial crisis, but the financial crisis was more or less kind of over by the time Bitcoin really started getting traction. And so this is really the first, assuming we go into some sort of big depression, this is really going to be the first test to see how Bitcoin does in a real crisis.
Yeah, yeah. So what we're entering is a depression, and what will happen is that there will be a lot of unemployment and a lot of company bankruptcies, which will set in. There will be a domino effect of the economy collapsing. It also means that a lot of people have to default on their debt, and and stock markets of course will go down, and bonds will default, and the government will, the Federal Reserve will print more money. Um, so there are two reasons why gold is going up. First of all, the risk of default. All these financial assets can default, stocks, bonds, etc. And gold doesn't. So people will rush to gold because that's a safe haven, and gold is inflation proof. So no matter how much money the Federal Reserve will print, gold will preserve its purchasing power. So I think gold will go up, and I haven't made my own models to predict the gold price, but I think it's fair to say it will go to $3,000 or something by next year. And what Bitcoin will do, I have no idea. We'll have to see. The halvening, they call it, is in May, right?
May 11th of 2020. That's right.
Yeah, of 2020. Now, I think it can also, it doesn't have to happen in that month. It could also happen a few months later. But
historically, it always has had a delay of at least 60 days, usually, I think, before it actually starts. Because I think what happens is the moment the halving happens, the miners are kind of screwed because they're getting half the reward. And so they're there's a consolidation period where they're kind of, weak miners kind of drop out, and then the strong miners try to stay in. And so it takes a few weeks, if not a couple of months, before that process. We've only had 2 halvings in history, so it's not like you can draw a long correlation here on 2 data points and assume that's going to happen again. But we can say for certain, in the only 2 halvings that have happened so far, it took couple of months for Bitcoin to then suddenly consolidate and start rising up.
Right. Okay. Wow. I thought it had more halvings, but or halvings. That would be correct.
There's 2 pronunciations. I usually say halving because it's half, but I've heard this Tim Draper, who's a billionaire, he said halvening. And he's the guy. Tim Draper is the guy who bought a bunch of Bitcoin for $19 million. It was confiscated Bitcoin that the U.S. government had confiscated from a legal Silk Road trader, and he bought it, and I think he's done very well.
Yeah.
He bought it roughly around the similar time frame that you were buying it. I don't know how much Bitcoin was worth there. It was probably a few $100.
Yeah, I like those Bitcoin terms like hodl and happening, and
it's a whole new vocabulary.
Yeah,
so I was predicting that that gold was going to hit 5,000 in this decade. So it sounds like you're thinking that's quite reachable.
I think it's reachable. Yeah. I also think we're going back to a, let's say, you must have heard of the term gold standard, but there have actually been a lot of gold standards. You have the classical gold standard. We have the gold exchange standard, the gold coin standard, Bretton Woods. You have a lot of ways to incorporate gold into the financial system, and I actually think that we'll go to a new gold standard, but I don't know for sure how it's going to look like. So I think gold will go up drastically. In the short term, though, I would like to add that it can be very volatile as well, because gold has a lot to do with inflation, and the beginning now of the depression is very deflationary. Right? If aggregate demand in the economy drops, nobody can spend money on beer or on shopping. So that's very deflationary. Prices will drop at first, and then the Federal Reserve will step in to create even more money, whatever is necessary, to boost inflation. What we'll also likely to see is straight out currency devaluations, like the Roosevelt did in 1933. Just devalued the dollar by, I believe, 41%. that can happen again, and gold long term will do well. And Bitcoin is not my expertise, but it's very exciting to look at the happening.
Right. No, it's true. Um, Now, one thing, there's a monkey wrench that's way down the road for us that's going to potentially disrupt the entire gold market. And it's not going to be in your lifetime or my lifetime. Um, and it's the fact that there's asteroids out there. There's the Psyche 16 asteroid that's orbiting between Mars and Jupiter. And people who are listening to this are probably thinking I'm absolutely crazy, but it's true. It's this asteroid of metal, and the NASA is going to be visiting it in 2026, 6 years away. And when they do, they're just going to be kind of flying around and checking it out and getting a good sense. But from all indications, it has, in today's market value, I mean, trillions and trillions and quadrillions of values in metals stuck on that asteroid. Quadrillions. Now, obviously, it's not actually worth quadrillion, because if that asteroid were to come to the United States, or sorry, to the world, it would flood and depress all those prices. So just speaking philosophically, Jan, between us, obviously it's not this won't happen for until the end of the century, probably, till they actually mine it and bring it. But wouldn't that, in fact, be the first time in gold's history where the stock to flow ratio gets completely out of whack, and the entire market of gold gets utterly disrupted and breaks a 6,000-year trend line?
No, it would be at least the second time, because it happened previously when Christopher Columbus traveled to the Americas and found America, and he quite soon the Spanish actually brought a lot of gold and silver home from Mexico, and that was the stock to flow changed dramatically. Not that I know the numbers by head, but I know there was a lot of inflation because so much gold and silver was coming in that inflation was extraordinarily high for those times. And they used the gold and silver a lot to buy spices and silk from China and India. But that was the first, so to say, asteroid that they found. These things can happen. Of course, it all has to do with does it make economic sense to get those? Are there also minerals or just metals?
I think it's just metals, but I could be wrong.
Metals, right. So, for example, by the way, there are also trillions and trillions of tons of gold at the core of the Earth. Did you know that? At the core of the Earth,
right?
There's a lot of gold there,
right?
But you can't get it. You can't get it out, right?
Right.
So maybe we can mine those asteroids, but maybe if just let's talk in dollar terms to keep it simple, it takes $5 billion to get 1 ounce of gold back to the Earth.
Right.
Doesn't make sense.
Right. Of course.
So maybe I'm just thinking out loud. There's also a lot of gold at the bottom of the sea. Right. You know, at 10 kilometers depth, there is a lot of gold, but doesn't make any economic sense yet to reach that gold. But this is the beauty of gold. If the price rises and it becomes profitable, we go to the bottom of the sea and get some new mine supply. And if the gold price rises some more, and if technology develops, because in terms of purchasing power of gold, what's also important is the development and the let's say the efficiency, how we can mine gold. So maybe Elon Musk develops some spaceships, and we can very easily go to the asteroid, to Psyche 16, and get it. And maybe all these things at the bottom of the sea and on asteroids will just keep the stock to flow ratio around 65, where it has been for a long time.
Right.
We don't know. At the moment, I know it's very expensive to get some gold. Gold is heavy. To get some gold from an asteroid. So I don't really see it as a threat. But of course, if we can build really big spaceships and go there, it might be a problem. But it can also be that we have then by that time like 20 or 40 billion people living on this planet, and we have also colonized Mars and whatever. And I don't know, but these are just some of my thoughts.
Yeah, interesting. I was thinking that I was just imagining a spaceship going out there, because even though gold is quite heavy in space, but in the asteroid belt, it's basically weightless. Effectively, I mean, it's not weightless, but it's a lot easier to move it than if you had to move tons and tons of gold on Earth because there's not the gravity that you're fighting as dramatically. So pulling it to the Earth, dragging it, kind of like dragging, let's say, an iceberg from Antarctica to bring fresh water somewhere, is not that hard. But it would just be, I was just trying to imagine, there's no way you could land with that gold. You would have to like drop it with parachutes because it would be so heavy, and there would have to be incredible parachutes. I think maybe you would just like maybe not even try to put a parachute on and just have it fall in like the Gulf of Mexico, or like maybe the Gulf of up there in what's it called? The Baltic Sea, someplace that doesn't have a very deep ocean.
Yeah.
So you let the gold, tons and tons, rain from the sky and create this huge, waves like a tsunami.
I will be there.
And then you let the gold sink to the bottom of the ocean, but in the Gulf of Mexico, it's not that deep. So therefore you can go down and retrieve that gold, because trying to like the amount of fuel that you would have to like give it a nice landing, and so that it doesn't like it lands perfectly well on land, you would have to use so much fuel because the damn thing you would want to maximize. Anyway, I was just trying to visualize this thing.
It's very, very interesting thoughts, actually, because what you say, if you reach the asteroid, getting off the asteroid wouldn't take a lot of energy because you're in space, probably.
Yeah.
Maybe the asteroid has a little bit of gravity, I don't know, but I don't think so.
It's negligible compared to trying to land that asteroid softly on the Earth, or at least a portion of the asteroid.
Well, think about getting gold to the asteroid. That would be a bitch.
Impossible. Impossible.
I would send Bitcoin. Yeah,
exactly.
Yeah, you're right. Maybe they will bring it, but also space, right? You need space in the spaceship. A ton of gold. I mean, gold is very dense, but already a ton of gold is like, it's a pretty big pile. I don't know if there's a lot of space in spaceships, actually.
I would think they would just lasso it and drag it and just pull it like they pull an iceberg in Antarctica.
Yeah.
You just kind of like you carve off a chunk with lasers or whatever you're doing, or with pickaxes or modern pickaxes. You carve it out, you put a rope around it, and you just pull it along with your spaceship, and you just drag it across space. And it takes a couple of years. It's taking 3 years to get there on a spaceship. 3 years. So it would take 3 years to come back. And then, but the challenge, of course, is it's easy to put it in Earth orbit, and you have it in Earth orbit, but then obviously that's not going to do any good. You need to bring it to Earth. And that's where I'm talking about, like, how do you make it land safely on Earth, this extremely heavy object? Because the more you can bring, the better for you, because you don't want to just bring like 1 ton of gold. You want to bring like 100 tons of gold. You want to bring a lot of gold, or thousands of tons of gold. But of course, then it would bring down the entire market because of the supply and demand just goes completely out of whack. Anyway, crazy thoughts.
I think it's very no. I don't think it's crazy thoughts. I mean, you gave this a lot more thought than I did, and I think it's very. Those are some pretty good ideas. You don't need a big spaceship. You just go there. You invent something to cut very large chunks of gold off and bring it back, and then you can really get thousands and thousands of tons maybe on the planet. I mean, I don't think it's much of a problem to just throw it through the to the orbit realm, how do you call it?
Through the atmosphere,
and just hit it in the sea and whatever. I mean, it's gold. We'll find it. Whatever. And no, but what is also interesting is that concerning the stock to flow ratio is that at this point, this year there will be 3,300 tons of gold being mined. That is more than ever. So if we bring these large chunks of gold from Psyche 16, maybe it's just how it always has been. We just keep increasing the amount of gold being mined because there are more people, the economy gets expanded, and but it's still maybe it's also so much that the value of gold will go down. I don't really know, but
it would have to go down at least temporarily. It would have to, just because the supply gets you inundate the market with supply, that it just
Yeah,
Let's
but
say if you
not,
magically doubled the supply of gold, then it just would have to bring the price down, at least temporarily.
yeah, of course. But look at what's now like I just said, we mine 3,000 tons per year.
Hmm.
And this is very, I can send you an article I wrote about this. What's being mined every year doesn't matter for the price of gold. The mining supply
Hmm.
is not, it doesn't have any impact on the price of gold. What sets the price of gold is supply and demand in above ground stock. So the stock is much more important than the stock to flow ratio or the flow. It's about the stock. So if in one year, for example, mining supply would be increased, that would only matter in the long term.
Hmm.
And what you just said is that if you double I don't think we're going to double the amount of gold anytime soon, not even with an asteroid. But suppose there would be a lot more, then you assume that we also can keep up mining what we have right now, and maybe I just saw some figures that reserves on this planet in the ground, these are called in-ground reserves, are kind of depleting,
Hmm.
right? So maybe mining really drops, and then this new thing comes in from the asteroid, and the stock to flow ratio would still, yeah, be a little bit constant. We don't really know, but yeah, there were a few assumptions in your analysis.
Coming back down to earth, Jan, let's get down to basics. So somebody's been listening to this podcast and listening to you, and they say, okay, I believe there's a Great Depression coming down the pipe, and I believe gold and maybe Bitcoin will go up, and I want to buy. What advice would you give them? I know this is not financial advice, but I'm just talking about practical advice. Where do they buy an ETF, a gold ETF? Some people say yes. Some people say, oh, no, no, no. You have to have the real thing. It's a big, huge difference between an ETF and gold. Um,
Yeah,
and then how do you, if you do want the physical gold, how do you choose a supplier? How do you choose just is there a website that ranks these suppliers, gives them ratings, feedback? Like eBay, it's easy. You just look at the rating of the seller and you say like, okay,
right.
lots of people have bought from them. They're reliable. They're good. How do you do that with the gold market? So lots of questions there, but give us.
Yeah, yeah. Well, first of all, you touched on ETFs. I wouldn't buy ETFs there because I can also send you a link about this. I wrote an article about the biggest gold ETF called GLD. And if you look at the structure of these things, there are a lot of banks involved. You got a trustee and a sponsor and a custodian and lots of counterparties. And what you do with gold is you insure yourself against the financial system, right? So, but if you would buy an ETF, you have like exposure to the price of gold, but you still have all these counterparties in the financial system. So it doesn't really insure you of anything. And what always happens in financial crisis is that the banks go, you have a bank holiday in the weekend. Suddenly on a Saturday, they say, all banks are closed and trading is halted and you can't reach your gold. So it's very important if you own gold for the reasons we talked about, crisis, preserving your purchasing power, having insurance on your savings, is to store it outside of the banking system and keep it in a physical form. Now you can do this by buying coins or small bars and keep it at home. That's obviously very easy if you only have a few $1,000s to spend. If you have a little bit more, you can think about a vault in your area where you feel safe with, but not a safety deposit box at the bank.
Did you say,
And
sorry, did you say not a safety deposit box?
not, not
Why not?
because those are in a bank, right? So what we saw also, the most recent examples were, for example, Greece, where there was a crisis, and also Cyprus, that was a couple of years ago. They always close the banks when there's a crisis, and they limit the amount of cash you can withdraw, but you also can't access your safety deposit box. And there have been even examples of or instances of that the bank is robbing the safety deposit boxes.
Mhm.
Um, no, really store it outside of the banking system. This whole banking system is very dangerous now. There are even rules in Europe which are called the bail-in rules, that if a bank goes bust, then you lose your money. In the United States, it's different, but banks are are sensitive entities.
Why
So if
why
you
is
want to
a
be,
vault? Why are you not protected against theft from a vault, a gold vault?
you mean a vault like my company or another gold broker?
I guess I'm not sure. Like you said that if you have it in a bank safety deposit box, there have been cases, and you're right about this, by the way. Even in the New York Times, have a report about this uh, that bank employees themselves have gotten into safety deposit boxes and stolen some of the goods that are in those safety deposit boxes. And
Yeah.
the amount of insurance you get is doesn't make up usually for what you've lost. And so that's true. I'm just saying that wherever you store physical gold, anywhere in any kind of third party custodian, also don't you face some amount of risk that that custodian steals?
Yeah, sure. Every other person you deal with is a risk, right? And
Right.
this goes back to let's say when we were hunters gatherers, then you had to trust your wife to keep an eye on your kid when you went out hunting. This is the essence of humanity. So yeah, of course, there's trust issues with also with private gold dealers and brokers.
So
But
how does a consumer, somebody who's listening to this, how do they make a wise decision? There's no foolproof guaranteed way because even if you put in a vault that's within a biking distance of your house, that a bomb could land on it. They could run in there with guns and machine guns and steal the entire money in the vault. Lots of disasters could theoretically happen.
yeah,
So
yeah.
there's no perfect riskless situation. But how can you minimize the risk and pick someplace reputable, safe that you're going to wake up one morning and the gold is suddenly gone?
Yeah, so you said a couple of important questions about risk, and life is full of risk. And you always should be aware of radical uncertainty because that's life. But the thing is that so you have to do your homework on a gold dealer, and a few of them have been existing for years now, and their primary purpose is to protect your gold. So they wanna do it right. They just like with our company, we have a meeting and we think, how can we make sure the gold is as safe as possible? What we have done is we have built our own vaults. We have two vaults at the moment, so, and we source our own gold from a refinery in Switzerland. We cast our own bars. So, what comes from Switzerland to Voima in Helsinki are Voima gold bars. Then we test it again, although it's the most trusted refineries in the world. Then we know for sure it's real gold and everything. Then we put it in our own vault. So, if you buy gold at us, we have minimized the counterparty entities. You only have the dealer, which is us, and the custodian, which is us. With other companies, I'm not saying they're not safe, but you have a gold broker, but they rent another vault company, and they source it from a third refinery. And I think it's it can be safe, but just as an example that we have it all in one, and but it's really up to the consumer, yeah, to pick a few yeah, well-known brands out there and do your homework in terms of how do the audit reports look like, is there insurance from an insurance company also. And just to come back to what we discussed about banks and safety deposit boxes, what, for example, my company does is we only sell and buy and store gold. That is what we do.
Mm.
Banks nowadays have it's not in their interest to protect your safety deposit boxes, right?
Mm.
I mean, they have totally different. They are
Yeah.
part of a global payment system. They are protected by governments. They can be shut down by governments. So just to a safety deposit box cannot be compared to gold dealers, so to say.
Right.
Um,
But
so
how?
yeah,
But
yeah.
is there a website that kind of ranks these various gold storing vault storing companies and is there anyone you recommend?
No, not that I know of, actually.
Okay.
And it's a coincidence that I got the question
I'm just
today.
trying to imagine, like, because if somebody's listening to this and they're like, they don't even know where to start. Like, okay, they know your company, that's one, but let's say they're afraid that, okay, it's in Helsinki. What if Russia decides to attack Helsinki and rob all the gold? And
Yeah,
that
sure. You should
I
think
don't,
about it.
right. And is there a risk of that? And what is the if Russia did go into Helsinki and steal all the gold? Do I get compensated or there's no insurance? I just lost it. Probably my guess is that's just gone.
Well, first of all, in defense of my company, we thought about this, and Finland is a member of the NATO, and actually we have now one vault in Helsinki, and Finland is one of the safest places in the world, just like Switzerland. And the second vault we bought is an old ammunition, let's say, cave in the bedrock in the north of Finland. It's called Lapland, and it's next to a NATO army base. And there are like 50 Hornets there, choppers, and 10,000 soldiers. So I'm not so worried about Russia coming in. There would be not to downplay my own company, but it's not like we store the amount of gold that is in Fort Knox, right?
Right.
So I don't think that's a risk. What were the other questions you were asking? Oh, you were asking about a website to compare gold dealers, right? That doesn't exist. I got the same question today on Twitter, and I maybe will write an article about it, to compare some pricings, because you always have the fee you have to pay to the gold dealer, the commission. You have the storage fee, you have safety differences. So maybe I'm going to write an article on like the 10 most well-known gold dealers in the world for people, to make it easier for people.
I will definitely love to see it and put a link to that. All these things you've been mentioning, I'm going to put links in the show notes just so people can find a little bit more about you and about some of the things that we've talked about. I really appreciate all your insight. Any other advice that you would give to people before we wrap this up?
No, not really. In short, I started to research gold because I saw a lot of risk in the financial system, and gold is like an insurance on your savings. And that's what I tell people. Make sure you own a little bit of gold. Don't put all your money in gold. Make sure you own a little bit of gold, 20%. I don't know. It's up to you. And make sure you are insured against financial turmoil.
Right. And I think that's especially relevant for this coming decade where we're really, got a lot of challenges that we're about to face. And the COVID seems to have kicked us off as on the wrong foot.
Yeah.
We're really going to
Maybe
be.
it's interesting to share. I just came up in my mind. It's an article I'm going to write probably next week. I've got some evidence that the Europeans have been preparing for a gold standard since at least 1990s. And so I will reveal some evidence of it next week, but I've also written a previous article, which is already online, which we can put underneath this video. And that is that European central banks have been repatriating their gold from London and the US, but there are also European central banks that we know of, Germany, Sweden, France, that have been upgrading their gold reserves to current wholesale market standards. So that means they want to be ready for when the gold is necessary. They want to have it liquid. If you have old bars from, say, the 1940s or 50s, these were not so pure as they are now. So you can't quickly sell them or do anything with them because they have to be refined. So it's very remarkable that Germany, Sweden, and France, and I think the Netherlands as well, maybe also other central banks, have upgraded all their gold reserves to current market standards. And also they have been communicating very differently. I kid you not, on the website of the Dutch central bank, it says gold will always retain its value. And if there is a financial shock, or the economy collapses, it can be used to build up a new system. That's quite remarkable, right? The German central bank says gold is the bedrock of stability for the international monetary system. They have been communicating quite differently in the past few years about gold. And with some other evidence I'm going to reveal, I really think that they are slowly moving. I'm not saying they are having thought out how the gold standard would look like, but they are really preparing for when it's going to happen, that they are prepared, right? Because maybe in 1971, when Nixon broke the gold window, they already started thinking in Europe, okay, we have this completely paper system now, but that will end one day. Right. And so I think they are prepared for the next system.
Yeah, and I do think the U.S. dollar's dominance days are numbered. I can't imagine it going for another 50 years, and they may barely last 10 more years.
Yeah, I don't know. I read a few books about it. It's actually quite difficult to get off the dollar standard. But what most definitely will happen is that the dollar will also be devalued by a lot. So, and how that then will play out in terms of, if it's still will be used for international commerce, because a lot of things are being paid in dollars, for example. We don't know. There is a lot of uncertainty, but it will certainly face a setback.
Last three questions. Number one, do you think, and they're quick, do you think that Bitcoin would become a reserve currency in the same way that gold is a reserve in many banks in the world?
No.
Okay.
No.
All right.
No, I don't think so.
Okay. And then number two is, what do people, for the storage fees, do you think, is it about 1% of your value? Let's say I buy $1,000 of gold. What would I be expect to pay for an annual upkeep of the vault? Is it 1% of the value?
Our company is 1%. That's a little bit more than a few others because we have our own vaults. It's usually in between 0.5% and 1%.
Got it.
So
okay.
and some companies have some advantages and or some disadvantages. We have our own vault, so at this point we're a bit more expensive in terms of storage fees. Mm-hmm. Maybe if we grow a lot, we'll go down. That I don't know actually, but it's usually in between 0.5% and 1%.
Last question: how do they find out more about you and your company?
Oh, you can go to Voima Gold and look on the Insights tab, and you can read there my latest articles, or go to Twitter, Jan Nieuwenhuis, or @JanGold_.
Wonderful. Jan, it's been a big pleasure. Thank you so much for your insight and everything. So I wish you the best, and keep in touch. And that concludes this episode of the WanderLearn podcast, where we explore travel, technology, and transformation. If you'd like to see the show notes with links to what we talked about, or if you'd like to comment on the show, or if you'd like to ask me a question, then go to WanderLearn.com and click on this episode. If you'd like to connect with me, just remember Tapon. That's my first initial and my last name. Tapon is the username I use on all social media. You can also get to my website by going to ftapon.com. And here's one last reason to remember Tapon. If you like what I do and would like to get rewarded for supporting my projects, then go to patreon.com/ftapon. That's where you can pick up some remarkable rewards for as little as $2 a month. And now for 5 quick favors. Number 1, subscribe to the WanderLearn podcast. 2, download it. 3, share it. 4, review it somewhere. And 5, sign up for my newsletter at wanderlearn.com. Our theme music was composed by Eric Stratman. This is Francis Tapon, encouraging you to wander and learn.